Hi, welcome to the Market Alert for Monday, the 5th of July 2021. So US stocks opened higher after less crazy jobs report, so this came out better than forecast. So that was good news for the market, not so good for the US dollar, which moved lower. That had an impact on the implied volatility. This was 15% on Thursday, down to 13.92 on Friday's close. So a bit of the risk coming out there, a bit of the tension in the options market. News for today. Well, the most important thing here is that the US is closed today. It's Independence Day celebrations. So the market's going to have to make its own direction. Half of the market's going to be missing. That's for sure. So electronic market for the US. And also we continue with the OPEC meetings as well. But all government bonds, etc., closed in the US, one of their biggest holidays today. And let's have a look at the market, see where we are. We'll start off with the Dow. Have a look at the bigger picture first, or we start with this. You can see the market moving higher on Friday on the report. We're heading back to the 89% retracement and also the double top to the left. You've got the all-time high here. I haven't got that drawn in, but why not? Let's just put that in. Won't take a second or two. So there's the all-time high, 35,091. We've got to get through this resistance area here first, which is significant. But when it's a quiet day today and there's no news, that's when the markets are likely to use that to their advantage, because nobody will be selling into them. On Friday, we can see the Dow's reaction to the non-farm pay numbers. This is a 5-minute chart. So straight up for 5 minutes and then continuing for the next 10 minutes before the market found some resistance, ran out of buyers. We then see a retracement there of about 78% before the market comes back down to 89% retracement there, which I'll just draw in for you. So from this low up to this high, you'll see the market coming back to 89% there. And also on the upside as well, whilst we're here, we'll just draw this in as well. And again, you can see that 78% there. You get used to seeing this after a while, how the market plays these patterns. And it's very easy to, like I say, to actually spot, because all you do is just look across and you go, well, that's nearer the low, so that's going to be, in the 89% area. And again, you can just see by drawing across, there's just a bit left to the upside there. So you can say, well, that's around 62, 78. You can see this all the way through. Like I say, your eyes just get used to seeing it the same as here. After the market's moved high, again, you can see that 62, 78. This is obviously higher than there, but it's not of there, so it's about a 50%. And you've got a double top there. You just say, and then on the downside, you can see exactly the same. You come back 62, the same there, coming back 62, 78. But anyway, that aside, the Dow then opened sharply lower. You can see them buying back in, and they get back above the 200 MA and the previous day's high, which is always very important. And then the market starts to make its way up, oscillating as it goes, trading sideways, breaking out to the upside, sideways again, and then moving higher. So the market putting on nearly 200 points and then running out of steam there. And overnight prices coming back, as we can see here, dropping sharply in the Asian market, but now sitting at the DP for the Dow. In the German DAX, we've got Friday's action there. Very quiet, actually, reaction for the DAX. Again, another inside buy. You've got this resistance across here for sure with the DAX there. Let's just draw this in because it's very important across here. So just do that. There you go. You can see. So 15,717. Watch out for this level. We've also got a situation where from here to here to measure to the downside as well. So let me just remove this one. The market stopped there before. The reason I'm having to use the one price bar is because this high isn't higher than this one. So all you have to do is just click twice at the bottom here, and it draws in the downside fibs. So just in case the DAX moves lower today, these are the downside targets. The upside targets are already in place, which you can see here. We've got 89, and then we've got the all-time high and another 89. So, and also this double top resistance or triple top that we've got here as well. Friday's DAX on the 5-minute looks like this. We had the market moving up sharply to begin with on the Spanish unemployment or employment numbers, and then running out of steam again. You can see that retracement as the market stops and then moves to the downside, move to the close, the 200 MA, see them testing the market at this level, and then they bring it back 78%, and then the market sideways, waiting for the non-farm payroll figures. You can see these out. You can see the market's reaction after, as prices then move to the downside before moving back to the upside. But we'll look at that in more detail in the 2-minute chart in just a moment. But yeah, it's again, we expect a quiet session there. Meanwhile, in the metals, I'll just find the metals for you. We've got the silver daily, that's what I'm after. And just before we look at this, notice this news out not so long ago, 2 a.m. Central bank said to be returning to buying gold, moving out of the US dollar. Well, no surprise there really when one's being devalued. And this is the article that it referred to on Bloomberg. Nice chart actually. You can see that during 2020 there was a drop-off in the buying of gold by central banks, but this is the projection through and the estimate for 21-22. As I've said before in other videos, the central bank started buying heavily in 2011 and have done so ever since then. So it's a case of, again, no surprise really when you see the US dollar losing its value as the world reserve currency. So let's go and find the silver daily charts. You can see on Friday this moving up sharply as the US dollar moved down in response to the non-farm payroll figures, up at 38% at the moment. The silver market trading up to that 26.50. At the moment it's just holding around that level, which is also a 38% retracement from this high to this low as well. I say the market's closed today, so it's electronic for the silver market. Whether it can make advances through this area of resistance, who knows? So we'll just have to wait and see. So the US dollar moving down sharply on Friday, as I say, in response to the non-farm payroll figures there. This needs to continue to head back to the downside and take out this low. And that will be a real good benefit for the metals markets to move back to the upside. Okay, that's a quick roundup and sort of forecast of where we're going today. Let's have a quick look at Friday's action in a bit more detail. We're in the pre-market session here just after completing the market alerts. This is the futures market kicking in, which moved lower down to the DP. You can see they're buying in at this level. We've got a spike in volume and support at that DP level there. So price is trading sideways, moving lower down to the psychological level there, big round number. Then we get the Spanish unemployment numbers coming out and the market opening. That's the cash market opening, and prices being predicted to the sort of spiking to the upside there, and then running into trouble. You can see the selling coming in immediately as soon as it got above the psychological level there, and then being picked up at the 20 bar moving average with some buying there as well. And then prices moving back to the upside. And I'm going to fast forward through this because prices became quiet. So you can see how quiet this sell order wasn't filled. And then the next one, which will turn up in just a moment. Again, you can see you've got that coming back there. You've got the retracement. Prices then show some more weakness. The sell order is filled and prices move to the downside, and you can see there at one point on the close there sitting at 50 points profit, or just over, minus the spread. But prices start to come back. They can come back very quickly, like you can see here. And when you get this type of activity here, this is the pros taking the profits off the table. In the futures market, they sell, and in order to get out of the position, they have to buy back, and then you'll see that come back sharply. That's why you get these big bars in a down move. It's the pros taking the profits and also taking out the trailing stops as well. So this trade, you'll see as the market came back, getting out of it for 38 points profit. Say there was 50 on the table at one point, but that quick rally back here with the profit taking put pay to that. So now we've got again, you can see the retracement down to 89, and prices then settling as a double bottom and trading sideways. And now we're waiting for the non-farm payroll, so let's just move forward there. We see a bit of a rally off the close as the market's waiting for the non-farm payrolls, but I'm just going to fast forward. Now, unfortunately, as I mentioned in Thursday's market alert, I had to go out and miss this, but I did record it. You can see there the DAX's reaction to the non-farm payrolls. Again, you can see the market trying to hold but fails to do so. And this weakness continued, obviously disappointed by the non-farm numbers. The Dow moving lower at the open, which we saw, down to the close again where we had the double bottom previously, and then back towards the DP. We have a buy signal here, the market moving up. It came back first, but you'll see it trade back up to the scalp area. See how quiet it became, as well as prices were in a sideways range, but managing to come back with the Dow, and that was the sort of the best reaction that the market had following the Dow move. Really, it's amazing. But that's again that pattern, isn't it? The Dow moving down, then moving back later on in the session, as the DAX did also as well. Okay, that will do it for this one. If there is anything else to report today, I'll let you know. But as ever, thanks for watching. See you in the next one.